Diane King Hall is with us. We'll start off with FedEx after its quarterly report.
Yeah, look, FedEx is actually higher off the back of its quarterly report card. It did beat expectations. We know the bar was lowered going into this. One thing I thought was interesting is that they did give guidance, because that was one of the questions going into this. Would FedEx give guidance? Given the impact that they had said that tariffs would have on them, especially with the changes to the de minimis exceptions there, because they had expected that to be a hit to their business. It doesn't mean they won't have a hit. They do still see $1 billion hit as tariffs impact their business. But look, investors are willing to forgive that given how they performed in this most recent quarter and the expectation of what's to come. They earned $383 per share on an adjusted basis. Revenue topped $22 billion, so they beat on both the top and bottom line. The CEO saying, quote, despite significant volatility and uncertainty around the global trade environment, our results demonstrate resilience. Shares shares flip-flopping right now, so we'll see how this plays out through the session. You saw average daily volumes in the U.S. increase 6%. Segment operating results, you had some improvement there. Their freight segment, though, that was lower. They see revenue growth in 2026 in the range of 4 to 6%, which is higher than what Wall Street was looking for. Wall Street was only looking for a little bit more than 1% there. For full year EPS for 2026, they're projecting between $17.20 to $19. The midpoint consensus is a little more than the midpoint of that is 18, obviously. The estimate is around that midpoint. FedEx is working on spinning off that FedEx freight business into a new publicly traded company, so we'll certainly watch that. The completion of that expected to come a little more than 6 months from June of next year, basically, so about 9 months. They have moved millions of packages through their system daily. Now, again, they were affected by that de minimis exception, which, you know, that permitted shipments under 800 rather to enter the U.S. duty-free. That impacts their business. But again, they did well this quarter, so we'll see. Once again, the stock is now higher.
Yeah, and I saw that UPS actually got a downgrade today, even though there was some good news on FedEx overall. So right now, as you noted, the stock is up about 0.5%. And we're seeing some price targets. I see 250, I see 275, and you mentioned some of them were at 227 here today. What about what's going on in the world of home builders? We look at Lennar, a double miss.
Yeah. So not great for Lennar. And the question going into this was, are we going to see, a page turn here when it comes to the home builders? So it looks like it's going to be kind of a, still challenging for home builders, and it may take some time to reach the performance that the street is looking for. Adjusted EPS coming in at $2 a share, revenue $8.8 billion, just a touch above that. So, that is a decline in revenue, 6%. And investors really been hoping to see that home builders turn a corner. Now, for profit, it was a decline for the fourth quarter in a row. They've been offering these incentives. We know that a lot of the home builders have been doing this. That obviously weighs on margins. So margins coming in a little bit weaker than what was expected and down from the same time a year ago. Gross margin a year ago was more than 20%. Now we're talking about the teens here. Again, deliveries of homes flat to slightly higher. The backdrop is just there's been stagnant sales in the housing market. Part of that is just because mortgage rates have been so high. There's also some economic uncertainty. You're having difficulty getting people to move off the sidelines to buy a home, given where rates are, and home buyers trying to wait for the needle to move on that front. The expectation is that we'll see rates continue to ease with this most recent cut by the Fed, and more cuts expected to come this year. So that's expected to help the housing market, but it's a slow grind. It reminds me of a conversation I had with Redfin's chief economist, Daryl Fairweather, who had said she did not expect, and she said this, I think, a year or so ago, maybe even 2 years ago, that we wouldn't really turn a corner in the housing market until 2026. So, the sky may be brightening by next year, but right now it's still challenging, Nicole.
And look, when we saw a quick dip in mortgages, we did get some good news on mortgage apps and refis, and it's all about these rates too. As they come down a bit, then people jump in. As they go up, look at what's happening with the 10-year after the Fed cut. It's now higher than before it even announced the cut. Last but not least, another day, another record for Alphabet, Google, which is, really, I think it was $80 3 years ago. and now is sitting at $250. It was $83 about 3 years ago. It's at $252 now.
Yeah, so I mean, this one just continuing to win now. It's really had a tailwind behind it ever since that decision with regard to the government as it related to Chrome. You've got some analyst activity around it today. Citizens JMP is raising their price target on Alphabet Google to $290 from $250. So they see even more upside from this record today. They have an outperform rating. They are keeping that outperform rating on it. They talk about the next Chrome era. They've been integrating Google AI into Chrome across multiple levels, so they see a tailwind there. I was talking to Austin Lyons, an analyst who was looking across Alphabet Google this morning, and one of the things he sees is that AI momentum. He pointed out that Gemini, the AI app, has outpaced ChatGPT in downloads in the App Store, so it's the top of the App Store, and that it's doing a better job with images. That's one of the challenges with ChatGPT is its ability to handle images. And at the same time, he pointed out that Alphabet Google can better monetize AI than ChatGPT, right? ChatGPT just has subscriptions versus Alphabet Google. It's got the tentacles across, whether we're talking about search, YouTube, et cetera, all its businesses, and it's got its ad business already well established.
Without a doubt. I mean, pretty exciting. Thank you so much.